It's official. Banks are now reducing interest rates. Today, we're going to look at exactly what is happening and, more importantly, what this means for you. Starting off with Macquarie, we take a look and we can see that they've recently announced a reduction of 0.1% on select variable home loans, which will take effect from the 26th of August 2022. And these take effect on the following home loans. So if you've got an owner-occupied principal and interest less than 60%, they're now offering a 3.64% interest rate, 3.59% for owner occupiers, principal and interest with a loan to value ratio less than 70%, 3.74% for owner occupied loans with principal and interest repayments less than 80%, and if you're an investor with principal and interest repayments less than 70%, the new rate will be 3.94%. St. George is the next bank that have also made some changes to their rates and recently have made an announcement that they too will be decreasing their variable rates, known as their basic home loans, by 0.1%. This isn't applicable on their standard variable, so keep watch for that, but their basic home loans are reducing, and that's their owner-occupied principal and interest, their investments with principal and interest only, and these take effect from the 25th of August. They also have made some announcements with their fixed rates, decreasing their owner-occupied fixed rates with principal and interest repayments, with their 1 and 2 years decreasing by 0.3% and their 3-year decreasing by 0.4%, and their investment home loan, their 1 year, is also changing, both principal and interest only facilities changing by 0.2%. Next up, we've got Bankwest, and they've made a number of changes to both their variable and fixed rates, which we'll go over, but essentially they've decreased a number of their products by 0.1%. Looking here at their Premium Select, which is one of their home loan variable rates, and owner-occupied with principal and interest repayments, they decreased most of their bands by 0.1%. We can see sub 80%, we can see it's reducing from 3.84% to 3.74%. From 70 to 80% is decreasing by 0.1%. That's 3.89 to 3.79. And from 80 to 90%, we can see it's reducing from 4.43% to 4.33%. With their investment products and principal and interest repayments, they too are decreasing by 0.1%, with their bands at less than 70% going down from 4.19 to 4.09. Their bands from 70 to 80% decreasing from 4.29% to 4.19%, and the final band, 80 to 90%, and that's all including mortgage insurance, is decreasing by 4.74% down to 4.64%. They're also offering a red hot 2-year fixed rate special, which has decreased quite considerably, and prior their offer was 5.69. Now it's down to 4.99%. And finishing off with ING, they've made quite a number of announcements, all which are effective as of the 23rd of August, with their own occupied interest rates with principal and interest repayments all reducing by 0.1%, with the exception of loans which are over 90%, which will remain unchanged. But essentially, if you're owing less than 80% loan to value ratio, you'll receive a 0.1% discount, with the new rate on offer at 3.74%. And when your loan to value ratio exceeds the 80% mark but is lower than the 90% mark, with your aggregate borrowings more than $150,000, you will also receive that 0.1% additional discount, with the new rates on offer at 4.04%. The investment rate is very similar story, with a 0.1% discount. The biggest change is not receiving an additional discount once you're over that 80% mark. So with a sub 80% interest rate, you will see the discount with ING. Moving in their interest only, and we can also see that their discounts have also applied by 0.1%. Providing you're under 80%, you will receive that discount, and you can see the new rates on offer for owner occupied and investment are just there. Continuing, we see that they've made some big changes with their fixed rate. So when your loan to value ratio is less than 80% and you've got a principal and interest repayment, we can see that their new fixed rates are decreasing by 0.4, 0.5 and 0.3% respectively. Starting off with 3-year fix, it's coming down to 4.99%. with their 4 years is also 4.99%, and their 5 years is now down to, and it continues where your loan to value ratio band is more than 80% but less than 90%, with a further reduction on their 3, 4, and 5 year fixed rates. Again, that 0.4, 0.5, and 0.3%, with the offers of a 3 year fix at 509, the 4 year being the same, and the 5 year being the 5.39%. And finally, seeing discounts when the loan to value ratio is greater than 90%, and that's with principal and interest repayments, seeing that owner occupiers are now being offered a 3 year fixed rate of 5.54, a 4 year fixed rate of 5.54, with also those discounts being the same, and finally the 5 year fixed rate being 5.84%. Overall, I think this is really good news, and whilst we'd love to see the variable rates decrease even more than 0.1%, any little bit counts, and more importantly, we're starting to see some big changes to those fixed rates, and if anything, they're really the canary in the coal mine. They're an indication on where we can expect rates to go, and we've already seen some major banks make predictions where rates will start to reduce in 2024, and even late 2023, there's some predictions that rates will start to soften. And if you're wanting to get your interest rate reviewed, we'd be happy to help here at Hunter Galloway. We're mortgage brokers that service across Australia and don't charge a fee. So reach out and hit us up at huntergalloway.com.au or call us on 1300 088 065. And until next time, I'll catch you then.